Welcome, guys, to Stock Talk on August 19th. Of course, this is a weekend Stock Talk. We're looking at the SPY, or the S&P 500, on the 180-day chart. Before we get started, I do appreciate everyone for watching and tuning into these videos. So thank you for spending your weekend looking at these Stock Talk videos talking about trends. So let's get started right away. Here's the SPY, and we're looking at the 180-day chart. And recall what we said in previous videos. We found that area of reversal, and we've been talking about the reversal back to the upside. And what happened Friday? Well, in fact, Friday, we did go up to the upside. The Dow recovered over 100 points. Now, you might be saying, well, wasn't the news the catalyst or some trade tensions? Yeah, well, anything can be a catalyst up or down, and that's just noise on the sidelines, whether that influences the markets or not. We let that market determine what's going on. But overall, we see that market sentiment continues to be bullish. Recall that we have this area of resistance, which is now acting as a new support at 284. You guys can see these candles, these 4-hour candles, in which we did form a support base area over here on Friday, and that's where we went to test and managed to continue on higher. Now, what's the big picture? You guys know, if you guys have been watching my previous videos, that the light blue line is the resistance line situated at 286.90, and that correlates pretty much with all-time highs on the S&P 500. So you guys can see that we do have a small resistance around 286, but given that we did consolidate down here for a couple of days, we can expect another push up, and we could break this resistance and start heading toward all-time highs. That is certainly possible. So be on the lookout for that. And of course, correlating inversely with the S&P 500 is TVIX, or volatility. So you guys can see that volatility as we expected. I'll take you guys to the yearly chart that we formed a reversal candle, and now as SPY manages to push higher, we do see volatility dipping. We still can see volatility going below 29.63, which is its yearly low. So that's just pretty much it. Looking at the SPY once again, you guys can see that we're back on the uptrend. Nothing too unusual on this chart, just looks very bullish. All right, so let's take a look at a couple of commodities. We'll start with 4/CL, or crude oil futures. And again, I want to reference you guys to past videos, right? What did we talk about in crude oil? Well, crude oil, and especially on the 180-day chart, we were seeing always a bear flag formation. Oh, it's been here's the pole, here's the flag, here's the next leg down, and what can we do? Well, we can say that it can certainly form the next bear flag for the another leg down. You guys can see that? So the thing we have to remember about this is right now it is beginning its retracement back to its moving averages. That's perfectly normal, right? Crude oil certainly doesn't have to continue on downward so quickly, and we talked about the potential for it to recover. In fact, we saw the ticker UWT, which correlated with crude oil, just move up a little over 1%. We'll take a look at that chart in a moment. But the big picture is, you guys can see this is a declining pattern. Are we away from the moving averages? Yes, we are. Here's the resistance area for crude oil, around $66. Are we there yet? We're not. Can it get there? Sure. So, this is just something to be, something to look out for. Perhaps once we get near that moving average, the 20-period moving average, you can possibly short that one. Of course, this is, based off of your risk tolerance, but this is just a downtrend for crude oil. Taking a look at UWT, which follows crude oil, you guys can see some similar patterns, right? In which we came up to the 200-period moving average, found some support, but we do have resistances around 32, 36. So just keep that in mind as crude oil does struggle to move higher. That's what I would want to say. Okay, so next up is 4/NG natural gas. And natural gas. Again, in previous videos, we talked about how natural gas, when we ended the day on this is Thursday, right, with our last stock talk, what did I say? I said that, natural gas is coming down. However, are we out of the bullish trajectory yet? And the answer was no, right? That we weren't out of the bullish trajectory. We really haven't been able to test this resistance at around 2.989 on natural gas, and that you guys can see that, we're all we're doing is consolidating sideways, possibly for that next leg up to the resistance area. So, but once again, I just want to place caution as we're nearing the resistance area. This is, if you're in the ticker UGAZ, which follows natural gas, that's the time to take out some of your profits. This is just how risk management goes. You'll learn more about it in the course that I'm developing, and that, you guys can see that right now UGAZ did go up significantly higher on Friday, 3.5%, but we're very close to the resistance area on UGAZ at 69.47. So that's just something to be cautious about. It certainly can break through, but we need some confirmation that it can break through. Right now, we don't see any confirmation, so that's that. Speaking of which, can you guys see this support area that I've marked in the past again? I box in these areas for you guys just to tell you where these support areas are, and look how we touch the support area and then move higher. And I make these support areas before these areas actually occur. So just something to keep in mind. All right, what's next? Gold futures, right? 4/GC. Now, gold futures, last time in the last stock talk, we left off with this tail candle, right? And we said that we're not at a near-term support. It's hard to see someone going into gold, even though we formed a reversal point, because we were not at an actual support area. Whether the market designates this as a support area, we'll take that, next time. But you guys can see that we did form that reversal area, and we did come up a little over 0.5%. So you might be like, oh my gosh, is gold on the path of reversal right now? And the answer to that is, in my opinion, it's too early to tell, because there's just not enough evidence involved in terms of a definitive reversal. Whether it goes to the moving average and get rejected, it certainly can, and you certainly don't want to be in that boat if it occurs. I'm not saying that it will, but it could. Now here's the next thing, JNUG, which correlates with gold. You guys can see JNUG, went up 8%. So you might be like, well, that was an interesting trade. Couldn't have I traded JNUG, which followed gold. But the one thing I want to caution you with JNUG and gold is that, can you guys see this massive fluctuation intraday? Now, herein lies the problem of trading gold, because let's say you first determined, you got in, you saw gold was reversing, you saw my Thursday night's video in terms of a possible reversal, and you took that position because your risk management was good. And then it went up. You're like, okay, everything's going as planned. But then all of a sudden, it started declining. And it declined actually to the intraday low, near the intraday low. So I don't know what you might be thinking, but if you got in at that point and you tried to write it down, that was over a 5% loss. So, would you have kept it at, because gold is on a downtrend, that the trend is down, short-term reversal back up. So would you have kept it? That's a question for you to answer, but you certainly can see the risk involved, and that's the massive fluctuation. That's what I'm talking about in terms of its risk. Yes, we made an intraday high after market at 8:15, but that's the risk you're taking, and you just have to be wary of what's going on. Let's take some of your tickers. Draxon, we'll start with Tesla. So let's take a look at the yearly chart of Tesla. And Tesla is one that I don't really like. Remember last time when we analyzed Tesla, and guys, I always like to reference to previous videos because, that kind of shows you what I talk about and how things play out later. And that's just interesting if you guys can see that correlation. And before we take a look at these tickers, guys, please hit that like button if you do like these videos. I enjoy doing these videos for you guys as always, but be sure to hit that like button if you do find some benefit or enjoy watching these videos. All right, Draxon, where do you see the near-term support level? So you guys can see I actually made an ascending low line up here. So the near-term support is around 300 or 298, but we need to see some sign of reversal or confirmation that we're going to reverse at that area. Right now, we certainly don't have that confirmation that Tesla is going to reverse. And therefore, even though I put that support line there, you know, it certainly doesn't have to hold. And that's just something you want to be cautious of, not something I would actively go in, as there's no reversal pattern right now. If this line breaks, you know, there's certainly the potential for Tesla to continue on lower, perhaps even under 250. So that's just something to watch. Nathan. Hey, Nathan, welcome to the channel. Can you look at Microsoft? Absolutely. So here's Microsoft. And right now, this, I like it. This is a very nice trend. As we know, Microsoft has been a powerhouse, especially given after earnings. You guys can see that it made an all-time high. People were eyeing Microsoft, but then look what happened, right? When we get significantly over the moving average, we have to come back, retest it. So now we're back here, and now this is a good time for an entry. And I think, you know, if depending on how much you're willing to invest, again, Microsoft looks solid. 107.44 is pretty much where we're at. And then there's, of course, that support area around 104.54. Those are all very good areas to potentially invest in Microsoft. Just note that this is kind of slower moving, but of course, this is an uptrend. Good job, Nathan. Oh, Addy boy. So OPK earnings came out good. The stock has bottomed and is ready to up further, up at least to $7. It's holding its 50 SMA very well. Your thoughts on it, please. Okay, let's take a look at this. So I believe I visited this one possibly in the past. Yeah, I have a resistance line here. So the problem with this chart is, yes, there is a potential. I agree. There is a potential to not hit $7. I think $7 is a little stretching it, but $6.50. There's a potential to hit that area. However, the question is, are you willing to take that risk? I know it's 10%, and I like to do this where I show you, you know, if you guys do start investing in right now, here are the number of candles above where you are versus the number of candles below where you are, right? And obviously, there's more candles below where you're buying in than above. So your risk is greater, in my opinion, or maybe the same as your reward. So, you know, maybe near term, if you're able to get that 2-3%, but there's definitely better patterns to invest in, right? This is still in a bearish trajectory. This usually plays out to the downside. So just keep that in mind. All right, Ben Carter, great work, thank you. And I know Chinese stocks are not doing well. However, YY has extremely strong fundamentals. How much downside do you think it has? So I agree that Chinese stocks have not been doing well. Now, even with strong fundamentals, people keep referencing IQ, strong fundamentals. What has IQ been doing? It's been pretty much declining, right? But, you know, you guys can see, here's why, you know, I've heard of this stock as well. And the problem is there's no sign of reversal. And as a matter of fact, you asked me where the support is. You know, I could say there's a near-term support at 71.59. There's a support at 64.11, and of course, there's a support around $40, 40.70. But in my opinion, this is on a declining pattern. It will continue to go down until we see any sign of reversal. Right now, there is certainly zero signs of reversal, and therefore the probable trajectory, whether it's in a few days or a few weeks, has to be down here, $63, perhaps even under $45 at that point. So no sign of reversal, can't go into this stock right now. But thank you for your submission as always. XJX, appreciate your thoughts on Box. So we talked about Box in terms of what? Remember last weekend, I believe this is last weekend, we saw this reversal candle, and then look what happened during the week. We pushed higher. However, this week we managed to continue lower, and this is obviously not a very good sign for Box. Right now that it's coming out, you guys can see that earnings is coming out near the end of the month. So, you know, 1.5 weeks, that's coming up soon. So just keep that in mind. In the meantime, this is going to go on lower. You guys can see this is a flag pattern in the forming. You know, there's nothing wrong technically with the bullish pattern of the chart, but in the near term, it's certainly heading lower. And you guys can see how the potential for it to go lower is significantly there. And we could still go to perhaps even under $24. That could be a good entry point, but we need to see that sign of reversal once again. Rizwan, can I take a look at RDSA? Let's take a look at that one. Okay, so for this stock, let's take a look. That is really interesting. So for this is an uptrending stock, but the one thing you want to keep in mind is we're at a near-term support. Can you guys see that near-term support in which we bounced off that support? So again, if you want to take that position, you certainly could, but you need to set a stop loss on this one. This is not a very pretty chart, and perhaps you would want to even wait a couple more weeks and see how this plays out, because as this is on the downtrend, you know, it might reverse here, it might not, it might continue lower. And therefore, you have to, if you did get in, you have to make sure you set a stop loss. All right. EXPE, thank you for your submission on Facebook, as always. So EXPE, that is interesting. So here's the thing with EXP. You guys can see that based off of earnings in the past two earnings, right? These two earnings right here, we came down significantly, right? Forming this, you know, pattern. But then all of a sudden on this earnings, when we were supposed to come down, we went up. You know, the surprise factor of earnings brought it up. This is Expedia. However, you know, again, this is based off of earnings, and look what happened after earnings. We started selling off again. So we need some more evidence, at the very least, that we can keep over this support at 126.90. And we just don't have enough information for this one to say that, yes, it's going to continue on higher. I can make a 50-50 case that it's going to go higher or lower, and therefore there's certainly better patterns to invest in. But yeah, Expedia is interesting to look at. Thank you for your ticker submission. Family Fernandez, thanks for your videos. They're awesome. Any words of wisdom on the mental aspect of trading? So yeah, we tackle a ton about mental aspect of trading in this trading course, and this is a huge part of the course. So as you pointed out, you know, having the discipline to make those smart trades is incredibly important. Looking at the intraday charts, 180-day charts, like I show you guys, very important. So you just have to keep that in mind as you're moving forward, that, you know, try not to let your emotions get the best of you. But good point to point out. That way, can I take a look at BAC? Absolutely. BAC, Bank of America. BAC is looking pretty good. Actually, you guys can see that BAC, where all of a sudden, you know, we attempted, looks like a pretty nice pattern. We could go to the upside. This is at 30.76. You guys can see that we broke out of the bear flag, not bull flag trajectory, sorry, and now we're heading on higher. So this is a very nice stock to look at. I'm going to take off that moving average. So far, so good. And this continues to be, perhaps you won't make your money back right away for Bank of America, but if you're willing to hold this one, say a year, you know, or longer, then you're certainly, you know, has that potential to make that amount. So back. Thank you for your submission. Armin, thank you for your comment. Arsh Toof, sorry, Aris Toof. Thank you for your comment. Thanks for all your compliments, guys. Very nice. Jason, you're welcome on the crude analysis, the crude oil analysis. Rico, thank you as always. You bought MU 400 shares. MU. Let me take a look. So herein lies the problem with MU. You guys can see that we fell to our near-term support here, and I think I see what you're seeing, sort of. But it's right now it's just risky. It's risky. You guys can see how the market's moved up, but MU barely nudged on Friday, right? You guys can see it went up pretty much nothing. So it's just a cause for concern that we have more sellers than buyers. So just be wary of this one as well. Lou, thank you for your comment. And in the meantime, I believe I have tackled everyone's tickers. So guys, keep commenting on these videos. I appreciate all of your comments, and I love responding to them too. If you know, some of the patterns that you guys talk about are certainly very interesting, and a lot of them are very insightful in terms of possibly investing into those specific tickers. In the meantime, guys, the stock market looks generally bullish as always. I mean, not always, but like it looks perfectly normal, right? There's nothing wrong with this pattern. So I know there's a lot of speculation out there. You know, we're nearing the bearish market. We're nearing all-time highs. We're going to come down. You know, and this is not necessarily true, because what goes up, as we know, can obviously continue to go up, and just keep that in mind. Until we see that major sign of a trend change, and of course I'll talk to you guys about it if we see it, but until we see that, we really can't say that we're going to start reversing into a bear market, whether it's this year or next year, you know, whenever it occurs, or 3 years from now. You know, we'll take it when it comes, but right now, market's looking good. All right, thank you for watching this video. See you guys tomorrow for another Stock Talk.